All right, let's get right into it. We're going to tackle a really big one today. One of the most important changes to military survivor benefits we've seen in decades. I'm talking about the repeal of the SBP-DIC offset, the so-called widow's tax. This was a huge shift, and we're going to break down exactly how it all works, piece by piece. So here's our game plan. First, we'll dig into the problem itself. Then we'll look at the legislative fix. We'll get into the nitty-gritty of the phase-out, what it meant for other programs, and, this is a big one, the tax implications. Let's get started.
Okay, first up, the statutory offset problem. Let's deconstruct what everyone called the widow's tax.
The first thing to get straight is that the widow's tax wasn't actually a tax from the IRS. It was a mandatory reduction, an offset written right into the law. And if you want to get technical, it's right there in 10 USC Section 1450C. What it did was brutal, really. It forced a dollar-for-dollar cut to a survivor's SBP annuity for every single dollar they got from their DIC benefit. For a lot of families, this meant the SBP payment they were counting on just vanished, completely wiped out.
And here's why this was so controversial. You're looking at two completely different pots of money for two different reasons. On one hand, you've got the Survivor Benefit Plan, or SBP. That's a DoD program. It's basically a life insurance annuity that the military member paid for out of their own pocket with premiums, and it's taxable. Then, on the other hand, you have Dependency and Indemnation Compensation, DIC. That comes from the VA. It's not insurance, it's compensation for a service-connected death, and it's totally tax-free. So you see the problem, right? You have a purchased, taxable insurance plan being canceled out by a tax-free indemnity benefit. It just never made sense.
So what was the government's logic for all those years? Well, the official line was all about preventing double dipping. The idea was that SBP and DIC were supposedly for the same thing, replacing a lost income. So in their view, paying out both would be like paying someone twice for the same loss. That was the argument that held up for decades. All right, so that brings us to the fix. After decades of fighting, the solution finally came through. It was Section 622 of the National Defense Authorization Act for fiscal year 2020. And of course, the number one question on everyone's mind was, is it retroactive? Can we get back pay for all those years the SBP was taken away? Unfortunately, the answer to that is a hard no. The law was written to be prospective, which is just a fancy way of saying it only looks forward. It didn't authorize any back pay for SBP that was withheld before January 1st, 2021. So it fixed the problem from that day on, but it couldn't go back and undo the past. Okay, so that leads to another really important question. See, under the old system, if your SBP was getting completely wiped out by the offset, you'd at least get a refund of the premiums that were paid in. So now that SBP is being paid again, did the government expect people to pay all those refunded premiums back? And the answer here is a big, fat zero. This was a huge relief for everyone. The NDAA very smartly included a no recoupment clause. That's legal speak for you don't have to pay it back. The DoD was explicitly forbidden from trying to claw back any of those premium refunds. Survivors got to keep it all. Now, this change didn't happen all at once, like flipping a switch. Congress decided on a phased repeal, rolling it out over a few years. Let's get into the math of how that 3-year transition actually worked. It was a 3-year plan, pretty straightforward. In 2021, they cut the offset down to 2/3. In 2022, it went down to just 1/3. And then, finally, in 2023, it was gone completely. Zero offset. So, let's look at 2021, Phase 1. The offset was still pretty hefty. The rule was that your SBP was reduced by 2/3 of whatever you got in DIC. So let's say your DIC payment was $1,500 a month. In 2021, that meant $1,000 was still being chopped right off your SBP payment. A big chunk, for sure. Then, in 2022, things got even better. This was Phase 2. The offset dropped to just 1/3 of the DIC payment. So using that same $1,500 DIC example, the reduction to your SBP was now only $500. You could really start to see the light at the end of the tunnel here. And then came the big day, January 1st, 2023. The offset was officially history, gone, eliminated. From that point on, survivors could finally receive both their full SBP and their full DIC payments at the same time. This is what's called concurrent receipt, and it was the moment everyone had been waiting for.
Okay, so getting rid of the offset wasn't just about one thing. It set off a chain reaction, like dominoes falling. A couple of other programs that were basically just band-aids for the offset were no longer needed.
One of those was something called the Special Survivor Indemnity Allowance, or SSIA. This was a monthly payment that was created specifically to give back a little bit of the money that the SBP-DIC offset was taking away. It was never a full fix, just a patch to lessen the sting. So it makes sense, right? Once the offset was gone, there was no reason for SSIA to exist anymore. Its entire job was to fight the offset. So when the offset died, SSIA did too. The very last payment went out in January of 2023, and that was it. There was another thing too, a common workaround that people used called the optional child annuity. Basically, to get around the offset, a surviving spouse could choose to have the SBP paid to their child instead of to themselves. The new law put a stop to that. It automatically reversed those choices and redirected the SBP benefit back to the surviving spouse, which is where it was supposed to go in the first place. All right, now we need to talk about what might be the single most important consequence of this whole thing, especially for financial planning. It's the huge tax implications, what some people started calling the tax bomb. And this table really spells it out. Look at the difference. Before the repeal, back in 2020, this survivor might have been getting about $2,400 a month in cash. But, and this is key, only $600 of that was actually taxable. Now, fast forward to 2023, their total monthly income is way up at $3,600. That's fantastic news. But look at their taxable income. It shot up from $600 to $2,100. That's a 250% jump in the amount of income they have to pay taxes on. So what does this all mean practically speaking? Well, first, the DOIC payment is still completely tax-exempt. That's protected by law, specifically 38 USC Section 5301A1. But the SBP, that entire newly restored amount, is fully taxable. The IRS sees it as pension income under IRC Section 61. And this is the critical part. This means survivors absolutely must update their tax withholding. You have to file a Form W-4P with DFAS to make sure they're taking out enough for taxes from this much larger payment. If you don't, you could be facing a massive unexpected tax bill and even under-withholding penalties come tax time. Look, let's be clear, this repeal is a huge financial victory for military survivors. It delivers hundreds, sometimes thousands of dollars more each month. It's a benefit that was earned and paid for, and it's finally being delivered. But it's not as simple as just more money in the bank. It really highlights this complicated world where you have DoD rules, VA rules, and the tax code all crashing into each other. So it really leaves us with a big question moving forward, doesn't it? Now that getting those payments is the new normal, how do we have to rethink long-term financial and tax planning for military survivors? This isn't the end of the story. It's really the start of a whole new chapter, and it means the old financial playbooks, they might not work anymore.